Inflation is now at 7%, December CPI rising at the fastest pace in 4 decades. My next guest says that in this environment, traditional diversification models need to be thrown out and that Bitcoin is the ultimate inflation hedge combined with the ultimate venture play. Roy Niederhoffer is a pioneering quantitative hedge fund manager. He is the president and founder of RG Niederhoffer Capital Management. His flagship fund defied 2 market crashes, up more than 100% in the dot-com crash and up 51% in 2008 when the S&P 500 was down 38%. And his Smart Alpha fund has had double-digit annual returns since 2000. Roy is also a Bitcoin OG, getting into the crypto space as early as 2011. Roy, welcome to Kitco. Good to have you.
Great to see you, Michelle.
All right, Roy, we have inflation at a 4-decade high, worst since 1982. Fed Chair Powell saying that the Fed is going to tighten, ending asset purchases in March, raising rates over the course of the year. Now, Powell's admitted that he was wrong on transitory inflation. It's clearly not. But do you think that the Fed can effectively rein in inflation now? How persistent do you see the inflation problem?
My view for a long time has been that the money printing that has occurred all the way since the global financial crisis in 2008 is really coming to a head now. So while we may have a trigger with COVID and some of the supply chain issues, this is something completely structural that we're experiencing. My view is that this is not going away, and moving rates from 0 to 0.25 to 0.5 up to 2% is not going to make a significant difference when you have real interest rates of minus 7%.
So you don't think that the Fed is going to be sufficiently aggressive in tackling inflation? Is that what you're saying?
Well, back in the 70s, when I started my interest in investing, we had interest rates in double digits. And under Volcker, he was very comfortable having rates of 11, 12%. My view is that while it may be what it takes to rein things in right now, that kind of double-digit interest rate, there's absolutely no way that we can achieve these because, number one, it'll probably crack the stock market long before that. And number two, it raises the funding costs for the government so high that it's absolutely impossible. The government can't exist anymore with short rates of about, say, 3 or 4%. It's just too high right there. We can't go to 12.
Okay, so you're saying what many of our guests on this channel have said, that the Fed is stuck between a rock and a hard place and simply doesn't have the tools to rein in inflation. So where do you see inflation going, big picture?
I think the long rise in equity markets and in all sorts of investable assets represents one place where we have seen inflation for many, many years. Now it's starting to creep in a lot of other areas. Obviously, labor prices are increasing, and with everyone staying home now because of COVID and probably not coming back, we're seeing commodity prices increasing, and of course, crypto prices have increased. So my view is this is the root cause. Again, is the Fed that's behind this.
All right, so you're saying inflation persists. Bitcoin is seen by many, including yourself, as an inflation hedge, yet it's down around 35% from its high. So what's going on here? Why have we seen this correction?
I think for many people, Bitcoin really is a risk asset, but this is, I would call a group of marginal investors. They're not the core investors in cryptocurrency. They're people that are in Robinhood. They're people that are just essentially retail investors. And when something goes down in their portfolio, they need to raise money elsewhere. And we saw an extreme example of that in March of 20, when pretty much anything that had a bid was sold. And it was the long bond got sold, the stock market got sold, crypto got sold, gold got sold. Things that you would never expect to be correlated got correlated in a big risk off move. And I think we see a little bit of that when the Fed was clearly becoming a little bit more aggressive at fighting inflation. So I think that spooked the crypto market somewhat. But really, the greatest one of the greatest reasons for crypto investing is an inflationary environment. So the core thesis, if you believe that crypto is in fact an inflation hedge, is even more bullish now than it was. If the Fed is serious about fighting inflation, well, you better have an inflation hedge, because what if they can't do what they need to do?
All right, but one of the, as we said, common investment cases for Bitcoin is that it serves as a hedge against rising inflation. If we do have a more hawkish Federal Reserve, as Powell is indicating that it will be, do you see that sentiment, if nothing else, just the belief that the Fed can be effective, taking the wind out of Bitcoin sales?
I think it's a little bit like, if I gave you a gold necklace and you said, well, Roy, I don't like this necklace because it's not a good inflation hedge. Well, there's a lot of reasons to like Bitcoin beyond the inflation hedge aspect of it. And I really see Bitcoin as a remarkable, innovative asset that combines many features of cash, of a store value with a fixed supply like gold, almost a collectible, and the ability to have it rise tremendously in value because it is growing in its utility. So it really, in some ways, combines not just an inflation hedge ability, but the best qualities of other stores of value, the stock market, and cash, because of course you can transact with it anywhere in the world. And that capability is literally growing by the hour.
All right, so let's break that down for us. Why do you see it as not only the ultimate inflation hedge, but as you just mentioned, bringing in the best aspects of stocks, gold, and cash, and being a venture tool as well? Break that down for us.
Sure. So there's an enormous demand right now in the digital asset space for capital. And what's happened so far is that there hasn't been a good way for new ventures in the digital asset space to get access through the traditional capital raising markets. So they're looking to digital asset holders, people that have Bitcoin and ETH, to fund these projects. So there's an enormous demand for coins and for stable coins, USDC, Tether, and others in the space. And because of that, yields are very, very attractive. From the safest, you might call the spot rate of Bitcoin, just like you can get a spot rate in investing US dollars. The spot rate of Bitcoin is probably somewhere between 1% and 4%, depending on where you'd like to put your Bitcoin. But if you get further and further into the DeFi market, if you're willing to make a direct VC type investment into a new project, the rates of return are even in the double and even in the triple digits in many cases. So this is an attractive return situation, far better than a US dollar account, which is paying zero, and in many cases in Europe, for example, negative. So we have that aspect of it. We have another aspect of it, which is, while Bitcoin is very, very volatile, yes, we admit that. And for maybe US residents, it seems like it's, why would you ever want to take that kind of volatility? But if you're in a place like Turkey, you're in a place like El Salvador, as we all know, interested in Bitcoin and making a huge transition there. In Africa, this is actually a very interesting place to put your money. And of course, not only can you get this interesting rate of return on it, but you can send it to your friend for almost zero using, even Bitcoin itself is now in the small numbers of single digit dollars to do a transaction. With Lightning Network, it's literally sub penny, with transaction capabilities of 1 million transactions per second coming for Bitcoin. So this, as a financial transaction tool like cash, is far superior to cash. It's far superior to the Visa network, which everyone holds up as the standard. I can't use the Visa network. I have to use a wire transfer. It takes me about 100 times as long and 100 times as much money for me in the business to send a wire transfer than it does to send $100 of Bitcoin, let's say. So we have that aspect of it. So that's the cash aspect. The other aspect of it that's very interesting is the store of value aspect. How is it better than gold? Well, for one thing, if you have gold in a safe, you don't end up with more gold coins when you open up your safe. Well, that is true with Bitcoin. It has an absolute finite supply. There never will be more than 21 million Bitcoin. But with gold, you can imagine there might be a technological advance that increases the supply. As the price goes up, mining becomes possible at higher rates, at higher costs. So the price of gold actually can increase. the supply of gold can increase. So in some ways, it's not quite a fixed supply asset the way Bitcoin is. So we have that aspect of it, the store of value and the fungibility, as I said, for cash. And then the final piece of it, why is it like stocks? Well, you essentially can make venture investments. Bitcoin comes with a beautiful ecosystem of investment possibilities, just like the stock market. So there we have the three asset classes combined, and that's never happened before. That's the innovation.
All right, we're going to break those down a little bit further. But I first want to get into the fact you said, like, if you put gold in a safe, you're not going to have more gold coins multiplying. And that reminded me of a story about you back in, I think, around 2011, that you were walking around literally handing out physical Bitcoin, in the sense that people would print the private key on a coin, and that you were just handing these out. Tell us about that story.
I became quite well known. It was a conference in Florida in 2012, and I found a gentleman who was putting one Bitcoin private keys in a hologram on the back of what looked like a Bitcoin about the size of a silver dollar. And I was giving these out, and of course, it came with an explanation of how
what was Bitcoin priced at then?
Oh, it's about $4. So it was really I literally couldn't give these away. I mean, I give one, I'd say, do you want more? And people would say, oh, no, it's only $4. It was like giving out pens. So it actually came a few weeks later. I was in a restaurant in New York, and I was wearing the same suit that I wore at the conference. And I realized I had a bunch of Bitcoins, the same thing, just weighing me down. My suit was hanging like this. So my friend, the maitre d', I said, hey, come on over here. I want to show you something. And I gave him my Bitcoin speech, and I said, here, take these. And I just shoveled a bunch of Bitcoin to him and then I felt guilty because I'd only given him a few tens of dollars worth of Bitcoin. And so I gave him $100 bill instead, on top of that.
Well, I'm sure you get excellent service at that restaurant with that maitre d' for the rest of your life. So safe to say that you're buying the dip now, if this is your outlook.
Yes, I'm very bullish. My thesis during these dips is that the reason that Bitcoin has not achieved the stratospheric levels that it has the potential to achieve is all of the criticisms, the environmental criticism, the volatility, the potential for regulation, the taxation, all the reasons that you shouldn't buy Bitcoin. That's why it's cheap and not at 100,000 or even 1 million. If Bitcoin gets to the market cap of a fiat currency, we're talking about tens of trillions of dollars. And that is, a multiple of 20 to 100 from where we are right now. Now, my view on this the whole way has been, it's probably wrong. It's probably not going to happen. But like a lottery, that it hits a million, let's say, of Bitcoin, or even 100,000 per Bitcoin. That's an unlikely outcome. But it's also unlikely that you'll win the lottery. Why doesn't everybody play the lottery all the time? Because it's a negative expectation game. My point is that Bitcoin is a positive expectation game. If it does absolutely nothing, it's a pretty interesting inflation hedge, just in case there's inflation and, worst case, devaluation of the US dollar and other fiat.
Hang on, you're saying that investing in Bitcoin is the same thesis as playing the lottery? One would think that you have better chances with Bitcoin, perhaps not reaching tens of millions worth of Bitcoin, but $100,000 Bitcoin seems to be a pretty reasonable price projection. You're saying that
my point is that the lottery has a highly asymmetric return. You can get 1 million times your initial investment, but on your expectation when you buy a lottery ticket is that you're going to be a loser. Otherwise, no one would even have a lottery if it was a positive expectation situation. But Bitcoin, I believe, is a positive expectation trade. It has this potential. It's not a 1 in a million shot, not a 1 in 100 shot that you make 100 times your money. It might be 1 in 5 or 1 in 10 or 1 in 30. And a lot of the middle cases are pretty interesting too, because you're getting this very interesting yield and the inflation hedge aspect of it. So with that asymmetry, anytime you see a dip, I think in the very reasons for the dip are in fact creating the opportunity to buy it at a low price. And were all the reasons that one doesn't want to buy it to suddenly go away, it would be worth 50,000, 500,000, even 5 million in a true edge case.
So wait, you've thrown out a whole range of numbers here. What is your price outlook for Bitcoin for the end of 2022?
I think we're going to see a rally as it becomes clear that inflation is not going away with 1% interest rates instead of 0% interest rates. I don't think too many people are going to change their behavior, their investment behavior, because rates are 1.00 instead of 0.25. It's not possible for that to be the case when we have 7% CPI increases and maybe even more coming. Even if it's 3%, even if it dies down for a bit. This is the result of all the dollars that have been printed for a dozen years or more. It's not just COVID. It's not just supply chain that's causing this.
So give me a number. Bitcoin by the end of 2022, if you had to put a number down.
If I had to put a number, I'd say the median price would be about 100,000. I think that's where we're going. And I think there's a chance for higher than that if it really becomes clear that the Fed is caught, as you say, between a rock and a hard place, that they have to tighten more, but it's an election year and they can't go to 3 and 4% in October because they'll crash the stock market and the Democrats won't get reelected if the stock market crashes. So with that inability to really do what the Fed needs to do, I think there's a great chance that that we see Bitcoin respond to the inflation threat. Now, the other possibility is that we do see a decline in the stock market. What if it goes down anyway? Well, we know the Fed's going to try to stop it. They've done that every time. Somehow central bankers have managed to come out every time the market's been down 10, 15, 20%. In Europe and here, central bankers get on the tape and they say, we're going to do everything it takes. We're going to print, we're going to lower interest rates. Well, they can't really lower interest rates right now. So whatever they're going to do, it probably involves printing money. And in that case, we have the devaluation scenario. This, to me, is the real potential for cryptocurrency and Bitcoin and the larger cryptocurrencies to far outshine any other asset. If we really start to see devaluation of fiat currency, this is an edge case. I'm not saying it's going to happen, but it is a risk that every investor needs to consider what will happen. And this is not like a stock market decline. You can weather a stock market decline of 50, 75%. It's happened before, it's going to happen again. It's happened throughout history. But what most people can't weather is having the value of their cash go down 99.99%. And that has been the vice of every issuer of fiat currency all the way back to Roman times. And that edge case is so destructive that, in my view, it's very, very important for people to have some fixed supply financial asset that's fungible, that you can trade anywhere around the world, and all the things that we've spoken about before. And I believe that Bitcoin represents that.
And you're saying that the Fed is going to be reluctant to act because it doesn't have the political will to be aggressive, even though it's supposed to be an apolitical organization, essentially.
I do. I think it's the Fed is politicized. And though I want to believe that they are completely independent, what we saw in 2018, after that first attempt to reduce the size of the Fed balance sheet, and we saw Powell change his mind on how aggressive he was going to be on reducing the Fed's balance sheet after the stock market went down. And that tells me that there's political pressure there. And once there's political pressure, all bets are off.
Well, Roy, to your point, the Fed clearly watches market reaction and adjusts accordingly. It's not an official mandate, but it may as well be if we look at how the Fed traditionally watches to see how the markets are responding to its moves and adjusts accordingly. And speaking of the markets, I want to bring up this aspect of correlation between Bitcoin and equity markets, because we are seeing more correlation there between Bitcoin and equity markets. The value of Bitcoin and other cryptocurrencies moving more in lockstep with market swings in the stock market. The 100-day correlation coefficient of Bitcoin and the S&P 500 is at around 0.44. Now, a 1 coefficient for our viewers means that assets are in fact in lockstep -1 means that they're moving in opposite directions. So, Roy, what does this do to the argument that Bitcoin is seen as a way to diversify, as a hedge for investment portfolios, if we are seeing a strong correlation between Bitcoin and the equity markets? Does that detract from the appeal of Bitcoin and other cryptos?
Well, as a bit of a statistician, I would say that it's, in some cases, a 0.44 correlation is a wonderfully significant result. But I would never, ever stake my portfolio on two things that are supposed to be or negatively correlated or positively correlated at 0.44. That's just not that high. It means that some small fraction, a fifth, a sixth of the variance of one.
Well, we have seen that Bitcoin has been
we certainly see it
with
over
the equity
long
markets. There has been
over
correlation.
Bigger stock market declines. Absolutely, what you're saying is correct. On a daily basis, I'm not sure I would stake that. I would make that claim. And let's remember that Bitcoin has vastly outperformed the stock market. So, we're talking about two assets that may have a correlation, but you've done much better in Bitcoin than you have in the stock market over longer periods of time. That having been said, I believe that this correlation is, again, kind of the edge investors, the people that are buying something, the momentum traders, the people that are watching Robinhood 24/7 and they're leveraged and their stock portfolio starts to go down. It's like, oh, I better sell Bitcoin. There's a bid in Bitcoin. I better get out of that one to shore up the margin in my stock portfolio, and back and forth. And these are the same thing. This is what happened in March of 20, as we mentioned before. So I think there is that potential initial correlation that can happen. However, if a stock market decline is caused by inflation, well, at that point, you start to say, well, what do I want to be invested in if I don't want to be in stocks? Well, I don't want to be in bonds anymore because stocks and bonds are going to be correlated to each other far more than 0.44 in an inflationary environment. There, you're really in trouble if you've got stocks and bonds in 60-40 or even worse, risk parity when stocks and bonds are levered. Bonds are levered with stocks on top of that. So you certainly don't want to have both of those assets. What do you want? Well, something that isn't going to go down by too much supply being created, something that's not at the whim of a central banker who might want to double the supply of the thing that the stock market is denominated in. In other words, print too many dollars. The stock market can actually go up, but on a real basis, it'll be worth less than it started. Zimbabwe being the great example of that. You can make a 1 trillion% in the Zimbabwe stock market, and on a real basis, you still lost 99% of your money. So that's, of course, an edge case. But you can have a lot of places along that line before you get there where you have it.
So this is why you're saying that traditional diversification models in this environment of unprecedented stimulus need to be discarded.
Exactly.
And you need to
Since the crash of 87, we've seen a world in which bonds represent a put on the stock market that pays you a return to own it. That shouldn't exist in portfolio theory. You should have to pay to get downside protection for your equity portfolio. But for 30 years, people have relied on the fact the Fed is going to ease monetary policy and bonds are going to be worth more when stocks go down. Well, what if they can't do that? Can the Fed ease right now? Forget it. There's no way they can ease right now. So where do you want to put your assets? You don't want to have it in bonds. They're going to go down too. And now something like real estate, something like collectibles, fixed supply assets. And what is the most liquid fixed supply asset? What is the fixed supply asset that has a clear rate of return that you can go to 20 different providers and put your money in like a bank? And by the way, you can use it everywhere from the most backward places and the most backward countries in the world to in the middle of the financial district instantly with a cell phone. It's Bitcoin.
All right, but I hear the big picture, but focusing on some of the price moves we've seen in the meantime, we've had Bitcoin break under $40,000. Is there a support level that if Bitcoin breaks, you would seriously start to be a tad concerned?
I think I'm a perma-bull on this asset. I think it's so technologically innovative and represents such an extraordinarily transformative asset that I'd want to buy more of it at 3,000 than I do at 30,000. And let's remember that Bitcoin, from the lows of even just exactly 2 years ago, Bitcoin was trading 3 or 4,000 just about 2 years ago, around March 12th of 2020. It hit even below 3,000. So now we're complaining that it went down from 69,000 to 44,000, I guess we're at right now. That's not too bad a return. So, I'll take the what is it, 14x or whatever it is to.
All right. So you're a perma bull. You've made that very clear. Let's talk about what you can see moving the price in sort of the short term. What does it take to get to that 100K Bitcoin by the end of the year? Is there a news event that you think sparks a rally? For example, the first US spot Bitcoin ETF, that's being considered. If that gets approved, to something like that spark a rally taking Bitcoin to 100K by the end of the year?
I don't know if we'll see that. I think it'd certainly be a much better investment product than what we're seeing, because when you have to buy futures to get invested in Bitcoin the way the current ETFs do, you can actually end up paying a negative roll yield. It can actually be very costly to enter using the futures markets by the nature of how the futures markets are priced. So a pure Bitcoin ETF rather than a futures-based Bitcoin ETF would be a wonderful product. And I really wish the SEC would allow Americans to invest in something like that, because they're just investing in things that are suboptimal so clearly. And it's really it's a crime that this is happening, and it's kind of silly almost. But that having been said, I don't think it takes even a catalyst event like that. I think what it takes is for people to say, wait a minute, there's inflation out there and it might not go away, and it might get a lot worse than it is right now. The US dollar could decline, but it could decline a lot in one of these edge cases. And I want to just have a little bit of my portfolio, of my pension fund, of my family office, of my endowment, of my high net worth in an asset that has a fixed supply. And I think on top of that, there probably needs to be a little bit of a psychological change, a bit of a trend change. Maybe it goes up 10%, 15% more from here. And people start to say, okay, well, maybe that was a long-term low. That price of, where did we hit, 30, 39.2 or something like that recently. And now we're at 47. Okay, that looks like a bottom right there on the chart. And a lot of people who are trained to look at stocks and trend follow in different assets might change their mind right there. But overall, I think these are great buying opportunities. And Bitcoin itself, and I'm a big Bitcoin maximalist. I don't want to rule out the other ones. And I'm sure we'll talk about this Ether and some of the other opportunities as well. But I think for institutions, they're going to go with the most liquid asset in the space, which is still Bitcoin, and to a lesser extent, Ether. And then nothing else is even close. Maybe you have 1/8 or 1/10 of the volume in coins number 3 through 10. And I think the simplicity and elegance of Bitcoin, at this point, people get what Bitcoin is. Ethereum is a very complex instrument. I mean,
well, we're gonna touch on Ethereum in a minute, because I do want to discuss that. But I'm still hung up on the price here, Roy, because 100K seemed to, by the end of 2022, to people last year, that would have sounded like quite conservative. That wouldn't seem like such a huge appreciation. So do you get a feeling that the enthusiasm has perhaps dampened a little bit?
My experience investing has often been that whatever market you're buying, the time to buy it is when it's climbing a wall of worry. And you can't think of why it's going up, and everything seems negative, but the thing is still going up anyway. And the time to sell something is the opposite, when you can't think of a reason for it to go down. And so maybe we look back at 69 and say, well, that was the release of the first Bitcoin ETF. Like, what could possibly go wrong at 69? Well, a lot can go wrong right now.